let's talk about Wall Street. Gripped by fear, investors are unnerved that other financial institutions may be in danger. Early show correspondent Jeff Glor is at the New York Stock Exchange with more. Good morning, Jeff.
Hey, Julie, good morning to you. Washington Mutual and Morgan Stanley are two very different companies, but they're both being affected by the same crisis and the same rumors. And there's a lot of frustration here this morning about this snowballing effect and when it will end.
Just when you thought it couldn't get much worse, the Dow slid again. Now down more than 800 points in 3 days. And if you're frustrated because you can't figure it out, well, the experts can't either.
I'm perplexed. I'm surprised. I expected an up day, not a big down day.
Despite the desired calming effect of an $85 billion government bailout of AIG, investors snatched money out of stocks, often routing it to ultra-safe Treasury notes and gold.
Right now, people have much more confidence in the ability of the U.S. government to meet its obligations than some of these financial institutions.
And as many asked, what company's next? This new world on Wall Street forced major banks to consider major changes, or maybe follow the fate of outfits like Bear Stearns and Lehman Brothers.
Certainly there's a speculation that the model of a standalone investment bank may not survive.
Future bank failures could put severe strain on the FDIC's insurance fund, which is at its lowest level since 2003.
Our economy has the strength to be able to deal with these shocks.
And more bailouts from Uncle Sam would almost surely swell the national debt, already at $9 trillion and already costing taxpayers $230 billion a year on interest alone.
This is a global crisis at this point. Russia's markets have been suspended until Friday. The Bank of Japan put $14 billion into money market funds. And governments around the world can keep printing money, Maggie, but that brings its own host of problems, including inflation and a decreased value in your paycheck. Maggie?
Jeff Glor at the New York Stock Exchange. Thanks, Jeff. Joining us now from Washington is Sheila Bair, chairman of the FDIC. Good morning, Chairman Bair.
Good morning. How are you?
I'm good, thank you. When you and I spoke a couple of months ago, I asked you if our money was safe in the bank, and your answer was an unequivocal yes. Are you still as confident today?
Yes. If you stay within our coverage limits, your money is absolutely safe. And yes, that guarantee has been good for 75 years and will continue to be so. Nobody has ever lost a penny of FDIC insured deposits.
You say that no one's ever lost a penny with the FDIC, but no one ever imagined that Lehman Brothers would go under. No one ever imagined that a big bank like Washington Mutual could be in danger of going under, as it is this morning. If that would happen, if a monster bank like WAMU failed, could you still meet your obligations?
Well, I don't comment on open operating institutions or certainly make any scenario predictions that are institution specific. I would say that, first of all, people should know that we are backed by the full faith and credit of the United States government. We do rely on industry-funded reserves. We think those industry-funded reserves will be more than ample to cover our losses, even with high loss scenarios. But we are backed by the full faith and credit of the United States government. We are the government, so people shouldn't think we're running out of money. We are the government. We have long-standing backup lines of credit with Treasury, and I'm confident we have whatever resources we will need to meet whatever challenges we may confront. This is an extraordinary time, but I think people should also understand that a lot of this turmoil is occurring outside of the banking sector, outside of insured depository institutions. Investment banks, insurance companies are different from FDIC-insured banks. So actually, for the most part, the FDIC-insured banks have weathered the storm pretty well so far. That doesn't mean that they don't have challenges. They do. But as at the end of the second quarter, 98% of all insured institutions were well capitalized, representing 99% of all banking assets. So far, insured banks are weathering the situation pretty well.
Chairman Bair, we should clarify that the money in your fund does not come from taxpayers. It comes from member banks who pay a premium.
Member banks who pay premiums, that's right.
But I also know that that fund is running lower than it should, the lowest since 2003. Could there come a point where you will have to tap into taxpayer money?
I don't think that will be the case. It happened once before in the early 90s, and it was not to cover losses. Again, I think our industry-funded reserves will be more than ample to cover losses. It was needed for short-term working capital. And what I mean by that is when a bank has to close, we pride ourselves on making the insured deposits immediately available. So we pay that money out very quickly. It takes us some time, though, to sell off the bank assets to get our money back. So there's a mismatch, a time lag. So sometimes there's a short-term need for working capital. And in the early 90s, monies. We used our Treasury line to meet that need. The money was paid back very quickly with interest at no cost to the taxpayers. And again, I don't think we'll have to tap into those Treasury lines, but if we do, our statute requires us to repay the money over time, again, through an industry assessment. So ultimately, that will not cost the taxpayer.
All right. Chairman Sheila Bair, we're out of time, but I do want to mention, because it's so important, your website, myfdicinsurance.gov.
Yes, thank you so much. Yes,
you're welcome.
yes.
I went on it last night, and it really is helpful. It tells you exactly how to allocate your money, spread it out at the banks to make sure that you're protected. So,
Yes,
Chairman
thank you for
Bair,
mentioning that, Maggie. Thank you.
Thank you. I know you like to be called chairman, not chairwoman, so thank you.